Preparing for a Client Due Diligence Analyst interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is client due diligence, and why is it important in financial services? Client due diligence is the process of identifying a customer, understanding who owns or controls them, and assessing their financial crime risk before and during the relationship. I would frame it as the first control in AML. If we do not know the client, we cannot monitor activity properly. Good CDD verifies identity, beneficial ownership, purpose of account, expected activity, sanctions or PEP exposure, and drives the risk rating. While answering, focus on CDD as a financial crime control, covering identity verification, beneficial ownership, purpose of relationship, risk assessment, and how accurate onboarding supports transaction monitoring and regulatory compliance. Question 2. How would you explain the difference between KYC, CDD, and EDD? KYC is the broader program for knowing customers and meeting regulatory obligations. CDD is the standard due diligence performed on most clients, and EDD is enhanced work for higher risk cases such as PEPs, complex ownership, adverse media, or high-risk countries. In an interview, I would avoid treating them as interchangeable. KYC is the umbrella, CDD is the baseline process, and EDD adds deeper verification, approvals, and ongoing scrutiny. Make sure to distinguish the umbrella compliance framework from standard due diligence and enhanced due diligence. Mention risk triggers, documentation depth, approvals, and ongoing monitoring expectations. Question 3. What does a risk-based approach mean in client due diligence? A risk-based approach means I do not treat every client the same. I assess the client's inherent risk using factors like industry, jurisdiction, product usage, ownership structure, expected activity, PEP status, and adverse media. A low-risk individual may need basic verification, while an offshore structure with nominee directors may require EDD. The key is proportionality. Apply more scrutiny where financial crime risk is higher, and document the rationale clearly. In your ANSAC, talk about allocating review effort based on client risk. Cover customer type, geography, product, ownership complexity, source of funds, and how ratings affect review frequency. Question 4. How would you identify beneficial owners for a corporate client with a complex ownership structure? I would start with the corporate ownership chart and verify each layer using registers, incorporation documents, shareholder records, or reliable databases. The goal is to trace ownership to natural persons who meet the firm's threshold, commonly 25%, though policy may be stricter. I would also identify control persons, such as directors or senior managers. If ownership is opaque, involves trusts, nominees, or offshore entities, I would escalate and consider enhanced due diligence. Be sure to mention ownership thresholds, control through voting rights or management, tracing layers to natural persons, using registries and corporate documents, and escalating opaque structures. Question 5. What is a politically exposed person, and how should a PEP relationship be handled? A politically exposed person is someone who holds or has held a prominent public function, along with certain family members and close associates. PEP status does not mean the client is criminal, but it raises corruption, bribery, and reputational risk. I would verify the PEP classification, understand source of wealth and source of funds, assess adverse media, obtain required senior approval, and ensure the relationship is subject to enhanced ongoing monitoring. While answering, define PEPs clearly and explain why they create higher bribery, corruption, and reputational risk. Include close associates, family members, senior approval, source of wealth, and monitoring. Question 6. If a sanctions screening alert is generated during onboarding, how would you handle it? I would not dismiss the alert based on name similarity alone. First, I would compare identifiers such as date of birth, nationality, address, registration number, passport details, and ownership links against the sanctioned party. If the data clearly does not match, I would document the false positive rationale. If there is uncertainty or a potential true match, I would escalate immediately to sanctions compliance and pause onboarding until formal clearance is received. Make sure to cover alert triage, comparing identifiers, avoiding assumptions, distinguishing false positives from potential matches, escalation procedures, documentation, and not proceeding until compliance clearance is obtained. Question 7. How do source of funds and source of wealth differ in due diligence? Source of funds is about the specific money being used in a transaction or account, such as salary savings, sale proceeds, dividends, or inheritance. Source of wealth is broader. It explains how the client accumulated their overall net worth over time. For example, a client may fund an account from a property sale, but their wealth may come from owning a manufacturing business. I would check whether both explanations are plausible and supported. In your answer, explain that source of funds relates to specific money entering the relationship, while source of wealth explains overall asset accumulation. Give examples and connect both to plausibility checks. Question 8. Walk me through the key steps you would follow when onboarding a new institutional client. I would begin by confirming the client type and required document checklist. Then I would verify legal existence, registered address, directors, authorized signers, ownership structure, beneficial owners, and control persons. Next, I would run sanctions, PEP, and adverse media screening, assess jurisdiction and product risk, and assign a risk rating. Any gaps or inconsistencies would be resolved before approval. Finally, I would document the rationale so future reviewers can follow the decision. Be sure to describe a practical workflow, collect documents, verify legal existence, identify ownership and control, screen parties, assess risk, resolve gaps, obtain approvals, and record decisions. Question 9. What documents would you typically request for a corporate client during CDD? For a corporate client, I would typically request a certificate of incorporation or registry extract, articles or memorandum, proof of registered address, director information, ownership structure, shareholder register, and IDs for beneficial owners or control persons. I may also need board resolutions, authorized signatory lists, tax forms, licenses, or financial statements, depending on the client type. The document request should be driven by policy, jurisdiction, and the client's risk profile. While answering, list core corporate documents but keep it risk-based. Include incorporation evidence, constitutional documents, ownership proof, directors, authorized signers, beneficial owner IDs, tax forms, and business rationale. Question 10. What events might trigger a periodic or event-driven CDD review? CDD is not a one-time exercise. Periodic reviews happen based on risk rating, but event-driven reviews occur when something material changes. Triggers include a change in beneficial ownership, directors, address, business activity, expected transaction behavior, new high-risk products, adverse media, sanctions exposure, or movement into a higher-risk jurisdiction. I would reassess the client profile, update documentation, refresh screening, and revise the risk rating if the new information changes the risk. Make sure to cover scheduled periodic reviews and specific trigger events, such as ownership changes, new products, adverse media, unusual transactions, jurisdiction changes, expired documents, or risk rating changes. Question 11. What would you do if client information in documents does not match information in internal systems? I would first identify the exact mismatch, such as legal name, address, ownership percentage, registration number, or director details. Then I would compare the reliability and date of each source, because a newer registry extract may supersede an older internal record. If needed, I would ask the relationship manager or client for clarification. I would not simply overwrite data without evidence. Material or suspicious inconsistencies should be escalated and clearly documented. In your answer, emphasize data integrity, investigating the discrepancy, checking source reliability, contacting relationship managers or clients, documenting resolution, and escalating material inconsistencies. Question 12. How would you assess a client connected to a high-risk jurisdiction? I would first determine the nature of the connection: incorporation, operations, ownership, source of funds, customers, or transaction flows. Then, I would consider the jurisdiction's sanctions exposure, FATF status, corruption risk, AML controls, and political stability. A genuine commercial reason matters. A vague offshore structure with no clear business purpose is more concerning. Depending on policy, I would perform EDD, obtain stronger evidence, and seek senior or compliance approval. Be sure to discuss country risk factors, sanctions, AML deficiencies, corruption levels, business rationale, transaction corridors, ownership links, and when enhanced due diligence or senior approval is required. Question 13. When would you escalate a case for potential suspicious activity reporting? I would escalate when I see red flags that cannot be reasonably explained, such as inconsistent source of funds, concealed ownership, negative media involving fraud, unusual payment patterns, sanctions links, or reluctance to provide documents. As a CDD analyst, I would not usually decide to file a SAR or STR myself. I would document the facts, avoid tipping off the client, and escalate through the firm's internal AML reporting chain for compliance review. While answering, avoid saying the analyst personally decides to file. Mention red flags, internal escalation, tipping off concerns, documentation, MLRO or compliance review, and confidentiality. Question 14. How do you balance meeting onboarding deadlines with maintaining CDD quality? I would prioritize cases based on risk, urgency, and completeness, but I would not bypass mandatory controls to meet a deadline. The best way to move quickly is to request the right documents early, use clear checklists, track open items, and escalate blockers before they become delays. I would keep relationship managers informed with specific gaps, not vague updates. Speed matters, but poor CDD creates regulatory, financial crime, and reputational risk. Make sure to show commercial awareness without compromising controls. Discuss prioritization, clear communication, checklists, risk-based triage, early escalation, audit trails, and refusing shortcuts on mandatory requirements. Question 15. What qualities make a strong client due diligence analyst? A strong CDD analyst needs more than checklist knowledge. I would highlight attention to detail, curiosity, sound judgment, and the confidence to challenge unclear information. The role also requires clear writing, because decisions must be defensible to compliance audit and regulators. Good analysts manage stakeholders professionally, protect confidential information, and stay organized under volume pressure. Most importantly, they understand the purpose behind the process, preventing financial crime while supporting legitimate business. In your answer, combine technical AML knowledge with practical behaviors, attention to detail, judgment, skepticism, communication, documentation discipline, stakeholder management, confidentiality, and ability to work under deadlines. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.